Good afternoon, ladies and gentlemen. Welcome to Vilnius. Welcome to conference. I'm very glad to see you all here. The venue is not complete yet. There should be more people, but some of them are still on the way to Vilnius, and they join us later. Some are maybe for the second session, maybe in the middle of the first session. But nevertheless, it's great to see you all here. And in my welcome remarks, I'll give you some fun information if you want, some general information about the conference. So altogether, we have almost 150 guests in total, and half of them are guests from more than 30 countries. Actually, the number is 35, 36. We didn't manage actually to figure out the exact number of countries where guests were coming from. Also, there are 7 institutions are represented here, and almost 50 of them are foreign institutions. And the shortest distance traveled by a participant was less than 250 meters. This is actually Ministry of Finance. The Parliament is a bit more, like 300 meters or something. And there is also one participant from a Bank of Lithuania who lives nearby, so it was 200 actually. But the participant who traveled sort of the longest distance is from Indonesia, and the distance is more than 10,000 kilometers. So these are fun facts, and also I'm very glad that actually we have sun today, because on Tuesday and a bit also yesterday we had snow, but you managed to avoid that, and these are the pictures that actually which were taken on Tuesday. And as you can see, it was really unusual. It's very unusual for us as well. But nevertheless, the snow, even Vilnius looked nice with the snow as well. But at the same time, snow reminded me of one thing, which I remember actually our keynote speaker, one of the keynote speakers tomorrow, Riksbank Governor Stefan Ingves, several times saying that housing is important because of climate. And of course, he had in mind Sweden when he was discussing housing-related topics. And that gave us an idea to check some things. So we tried to see whether there is a link between the price or price per square meter and the difference between extreme high and low temperatures in mainly, I think, yes, these are only European countries. But unfortunately, there doesn't seem to be a close link. But nevertheless, was interesting idea. And also inspired by this exercise, we also tried other things. We tried to see whether there is any link between house prices and happiness ranking points. As you can see here, the link is a bit closer, but of course, that's also obvious in a way, because happiness ranking points correlate very closely with economic development, and the richer the country, of course, the higher the happiness. It seems that way. But nevertheless, it was an interesting exercise. And going to the conference, to the content, to the main topic of the conference, I would like to say a few words how we came up with this conference and the main topic of the conference. So it started from my observation that policymakers always tend to claim that they do not target house prices, but nevertheless, they seem to behave in practice a bit differently. But as to prove the point, what policymakers are actually saying, I copied here a few examples from Bank of England, Reserve Bank of Australia, and Hong Kong Monetary Authority, respectively. Explicitly, for example, Bank of England, they're saying it is not the FPC's role to control house prices, and the tools have not been aimed at targeting property prices, and rather, these tools are to mitigate the risks that a cycle of rising house prices and overextension of credit can pose to financial and macroeconomic stability. So this is what is the official storyline, but in practice it's always, especially from general public, we get questions about housing prices, about the housing market. It's always on the minds of general public. And I started thinking that this is, despite what we officials say, what we have, policymakers tend to react to house price changes. And in the recent past, we had a few very interesting examples. What happened in Norway and Denmark. We'll have presentations from Norway and Denmark, and in Canada in particular. So when your house prices are rising on a year-on-year basis by almost a quarter, you have to do something. It doesn't matter what arguments theoretical you have to do something. Otherwise, probably you would they would start thinking that you're not doing your job. And at the same time, it is interesting that after those actions are taken, the assessment is also based on, so the general public and policymakers themselves, they evaluate the success or failure of their actions by looking at what happened to house prices. So by seeing this inconsistency in what is sort of officially said, and also how policymakers behave in practice, I sort of was wondering and decided to pose this question as a main conference topic. There is a big debate about targeting asset prices in general, and I've seen some of the slides already of presentation. They look really interesting and promising. So, and here I'm going to stop. So my introduction is very short.